Okay, well, it's a new week, and today is Monday. Today is Monday, 27th of March, and this is the end of market review for today. So, as you can already see, today was a red day for me. Took an L today. So, right now, I've taken four trades out of 20 trades, right? So, for the 4 out of 20, you can see I have 3 losses and 1 win so far, and I'm down 0.5% or 1 hour, right? So as you all know, the strategy that I'm trading is either I get -1 or +2, -1 hour or +2, and I'm risking 0.5%. That's 0.5%. So I'm currently down 0.5%, right? Or I'm down 1 hour, whichever way you want to put it, right? So something interesting happened today, right? So today I was watching some of ICT's content, right? As you all know, I'm currently studying ICT, right? I'm trying to do that whilst trading this strategy as well. And the thing is, I'm not trying to use what I learned to make money just yet, right? I'm only observing. So the more I'm learning, the more I'm observing. So even though I took a loss here, I can pretty much break down this chart and talk about everything that happened. And that's what this end of market review is for. It's actually to help me like get more conversant with the the concepts that I'm actually learning, right? So the more I learn and the more I observe what I learn on the charts, the better my you know technical game improves. But technical alone, right? Being good with technical analysis is not a guarantee that you make money, right? You can have a terrible strategy, not a terrible, let's say an average strategy, like the strategy I'm currently working with is an average strategy, right? You can have that kind of strategy and still be profitable, right? So I've lost 3 trades and I've won only 1 trade. So to some people, it might be like, you've out of 4 trades, you've lost 3, you won 1. But the edge is there over a series of trades, over a large sample size. And that's what I'm trying to show, right? That's what I'm trying to prove to myself, right? That, okay, does this strategy have an edge? From my back testing, it shows that, okay, I was able to do about 50%, right? So 50% win rate. So now I'm forward testing to see what my win rate is going to be, right? In live market conditions. Am I going to get emotional? Am I going to hesitate, right? To take the trade? Am I going to let my emotions get in play, right? Maybe because it's not easy, right? It might sound easy just like that, but like actually putting on a trade and detaching from the outcome is not just as easy as it sounds. It actually takes the understanding. You actually have to have that understanding of, I have to take this trade because I'm still going to take the next 10 trades, the next 5 trades, the next 20 trades, right? And today I almost hesitated. In fact, I hesitated, right? I hesitated when price came into my entry, right? Because I have this fair value gap right here where I took my trade from. Yes, this gap between this candle and this candle, between this candle's low and this candle's high. When price came into this level right here, let me take price back a bit, right? Yep. When price dipped back in here, I hesitated to take my trade and I took my trade somewhere around here, right? Somewhere around here was where my entry was. And that was terrible because that actually made me lose a little bit more than 0.5%, right? So I hesitated to take that trade. And this is what I'm trying to say, like, it's not really easy, but it's necessary because you have to understand confidence is a must in this market, right? You cannot expect every trade to be a win, no matter how good you are technically, right? You have to execute those trades. You have to execute those trades. I have to execute those trades. So what do we see here? Let me break down the chart a little bit. We have equal highs. Look at these equal highs. And what did price do here? Price round down took out this sell side liquidity. Okay, so I was mentioning that I learned something today, right? So today I watched a video on impulse swings and market protraction. So that's on ICT's YouTube channel. You can go check that in his 2016 call mentorship, right? The last video, the 8th video. So he was talking about how price can be time sensitive, right? And obviously I'm trading with the concept of time, right? So he was like 7 a.m. New York session, which is like 1 p.m. So I marked that out, 1 p.m. He's like, most times when price moves in a direction, right, that is for manipulation, and price usually ends up going in the opposite direction. So today, what did I see? I saw price move down, right? Which means what? I'm expecting to see price move up, right? So when price moved down, what did it now do? What did I see it do, right? What did I see price do? I saw price take out this high. What's above this high? What's above this high? Buy stops, right? Buy stops above this high. So it looks something like this, right? If you've ever traded breakout strategies, you'd know what I'm talking about, right? And let's say you're targeting somewhere up here, or maybe this resistance level here, right? And I'm not talking about retail traders, right? Because ICT says you have to think about this like the banks, like how the banks think about it, not from the standpoint of a retail trader, right? So buy stops below here, right? Stops are below here. Boom. Triggered into the buy stops, stop loss hit, right? So buy stops. What's below here? Sell stops. Just the same analogy. Sell stops below here. You get into the trade. Stop loss above here. Take profit somewhere far away, right? So when we know that, okay, buy side liquidity is above here, sell stops, right? So the market around those sell stops created a new low here, right? Around those sell stops too, right? Pulled back into this level. So this was where I had my trade. This was where I had my entry, right? Because we had this fair value gap on this candle. Trade did not play out, right? Trade didn't play out. Got stopped out of this trade. Took uh took 0.5% loss on this one, right? I'm trying to play this. I don't know why it's slowing down. Okay, so you see there, got stopped out. Now I want to show you something. When I got stopped out, you can see this huge. Let me take this off so I can see this clearly. You can see how price created another fair value gap here, right? Price created another one right here. And this is why I trade only, this is why I take only one trade. Only one trade. And look at what happened, right? If this was to be my first trade, sure, I would have taken it, right? Looking for my normal 1 to 2, right? Put my entry here, stops above this candle, and target a 1 to 2, just like this, right? And this is why I don't take multiple trades, right? This is why I take only one trade and I wait for the next day. Because imagine I've taken this trade. I'm not saying the outcome is bad, right? But according to the way I trade, right? According to the rules I made up, right? Only one trade a day. One trade a day, right? Because even if this trade was a win, right? That's still me like breaking the rules and whatnot. So following the rules, putting emotions aside, and all of that is actually very important.
Blessing pens in a heart shape with medium dark.
it's actually very important to stick to the rules, to stick to the plan, right? So we saw price run above these equal highs, right? So now observing what ICT said after 1 p.m., right? New York session or pre-New York, the direction price moves in first. We'll be expecting to see price move in that opposite direction. So we have equal highs here. What do we have above here? Buy stops. We have buy stops above here. What do we have below here? Sell stops, right? And if ICT also has a video on liquidity runs, if you don't know what liquidity runs is, right? So that's basically price moving from buy stops, taking buy side liquidity to taking sell side liquidity. So this is how the market moves essentially, even on higher time frames. But the market works in fractals. That's why we can have the same setups on lower time frames, right? We have these same setups on the lower time frames because the market is moving in fractals, right? It will run buy side, it will run sell side, it will run sell side, it will run buy side. Do you get? So this is actually how the market moves, right? Look at this other block here, right? Let's not go into that. But basically, look how the market moves, right? So this is the importance of me actually like studying ICT because I'm getting to understand these concepts and I'm building the understanding, right? I'm not trying to make money with what I'm learning. I already have a dumb strategy that I'm trading, right? A strategy for beginners. Let's just put it that way. But I'm sticking to my strategy, right? And I'm using that. Once I take my 20 trades, if I have an edge with that strategy, then I can use that to make money. I don't have to use something so advanced to make money, right? Because even if I get so good at ICT, maybe I can choose to switch strategies, right? But it will still be the same process. 20 trades, right? 20 trades of a set of 20 trades. What's the profitability? What's the return? That's still the approach to it. It's not about the technical game, it's actually about you as a trader. You as a trader, you are the holy grail. You can actually have a strategy that is very, very average and you can make lots of money with it. And there are people that are trading very, very advanced strategies with high strike rates, but they still can't make money with it because they can't actually manage themselves very well. And this is actually what I'm trying to learn. I'm not trying to chase a shiny object, right? Because when you see price moves like this, price still moves all the way into here, right? All the way into here. Price still moves all the way into here. So I'm not trying to chase the holy grail strategy or whatever, because I don't need the strategy to be perfect in order to make money. I just need to manage my expectations and my emotions better. As long as you can manage your emotions and your expectations better, then you can become more profitable in this game of trading. And this is what I've come to understand, right? So, despite the fact that I'm learning ICT, I'm learning ICT because obviously I want to learn how the market works, how price action works, right? Because ICT is a very precise trader, right? His level of precision is very high. So that's why I've actually like taken up that model, right? To actually learn how to, even as I've taken a loss, right? I can still say, okay, I know why this happened. I know why this happened. Looking at this chart, I know where the sell side is, I know where the buy side is, and all of that, right? I know where the sell side liquidity is, I know where buy side liquidity is. I know that this right here is an optimal trade entry, right? Optimal trade entry right here. I know that this is another run on sell side, another run on sell side, right? But I'm not trying to go into all of that right now. I'm just only okay. I've showed you guys my trade. My trade was a loss, and this is the end of market review, right? This is I'm just going over the market, looking at what has happened, understanding what has happened, and then moving on, right? Because if we break this down into you can see what we have here. A bit of sideways movement, expansion, consolidation, expansion. Right? Very, very simple. Looking in hindsight, right? Looking at it in hindsight. And I believe that over time, if I continue to do this exercise, because this is like an exercise for me, for my eyes, I'm training my mind, I'm sharpening my mind. If I can do this exercise for like a year, 6 months, obviously I'll get better at looking at the charts and understanding what's going on even before it happens, right? Even before it happens, your intuition builds. Because this is not my first time trading, right? I've been trading for like 4 years now. This will be like my fourth year. So obviously, I've traded different strategies in the past. I've traded smart money concepts in the past. So I have a little understanding of the market. I'm not going to say I have a lot of understanding. I have a little understanding of the market. So that also helps, right? But now that I'm actually like studying ICT concept, I'm actually enjoying it because I get to like look at the charts and see what he's talking about. Like I literally just saw the video on protraction and impulse swings today, and today we had this move down from 1 p.m., right? And the market literally just pushed in the opposite direction. So it's actually fun to see that what you learned actually plays out, right? So that's something to investigate, right? So from today henceforth, this is something I would actually start looking at and like try to understand the frequency of how often it happens, right? How often is it happening, especially on gold? If this is something that happens 70% of the time, then that's an edge. This is how you create an edge. Don't just jump because ICT says jump, right? I'm not just going to jump and start trading it because it says jump. I'm not going to abandon my strategy because he says like this is what works, right? You observe, you gather data. I'm not saying he's wrong, but you actually need to get, and he's also in support of this. You actually need to gather the data on what he's teaching you before you use it in the live markets, right? Don't just actually have to do the work because you actually need to be confident in what you're doing. It's important to be confident in what you're doing so that when you're executing trades, you be confident. So that if I see the market move down, I'll be like, okay, now I have to be patient and wait for the market to show me something. Okay, the market shows me a run on sell side, it pulls up, it gives me the optimal trade entry. Okay, this is a good place to enter. This is another entry. This is a target. This is a target. This is another target. These highs are targets. This liquidity void is a target. Do you understand? So you know where to scale out. You know where to do all those scaling and scale out. You know where to scale out of the markets, right? You see this pull down here. You see this pull up. You scale out. You see this move down. You see this move up. You scale out. Very very simple, but it takes a lot of work and a lot of understanding and a lot of patience, right? So I'm very patient with this, with learning ICT, right? It's not about the money. I know that the strategy I'm trading is very 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 average, right? But my goal is to stick to it and see if I can create an edge with it. If I can create an edge with it and if I can make money with it, fine. If I can't do that, I'll look for something else, right? It's a never ending process of learning, right? But for now, I'm actually like enjoying learning ICT, right? I'm not saying anybody should go and learn from him. I'm not advocating, but I'm just saying this is what I'm doing, right? I'm not saying I've made so and so money with this. I've not made a dime, I've not made a penny, but I'm actually learning and I'm actually seeing a couple of the things that he's teaching actually playing out. And obviously, it's never going to happen 100% of the time. These things will never work 100% of the time. That's why it's good to manage expectations. Like I said, manage expectations and manage your emotions properly, and you can make any strategy work for you because you are the holy grail. These are things I didn't know coming into the market, or even in my first 3 years of trading, I didn't know all these things. But it's a never ending learning process, and I'm happy and I'm grateful that I have the opportunity to actually keep on learning and keep on learning. So, this is the end of the market review for today, and I'll see you guys in the next one.